Hi everyone, this is Doug Campbell with Right Way Options, and I want to welcome you back to video number 5 of my series, A Method for Consistent Profits. Hey guys, one of the things that happens as a trading coach is I meet and talk with a lot of people. And those folks, the number one question I really hear from people is, how do I enter the trade? What's the best entry into the trade? What indicators should I use to show me that entry into the trade? Well, what I want to talk about today is some simple chart patterns, some simple ways that you can get in a trade very easily without a lot of complication, without a lot of hoopla. And as a matter of fact, indicators you're going to find will actually get in your way and to being successful at consistently profiting. So if that's of interest to you, stick around. We're going to get into it, and I'll talk to you soon. Okay, well, thank you everyone, and let's get started here. What I want to get into is a little bit about what I believe is the most important thing in trading. And I've talked about this before, but I believe price is king. It is the most important part of any chart. It's the most important part of any trade. When you think about it, there's never been an indicator ever pay you anything. In fact, you've never ever made a dime on an indicator. You make money from the chart. You make money from the price action of that stock moving. When that stock starts to move, you make money. And so price has always been the most important indicator out there. And if you can learn to become a student of price, it's one of the things that turned my life around as a trader, is becoming that student of price action. Learning to read and follow price action truly changed my trading life, made me, corrected all of my problems, helped me focus in the right place, and allowed me to become the full-time trader that I want to be. So indicators often give traders this false sense of security. It gives them the illusion that they can predict price action. Now, when you think about all the different things that are happening in the world, not alone with the stock, you've got issues with the CEO, the earnings, the company products, all of these different things. You've got everything that's going on politically here and around the world, all these different events affecting how the market reacts, how a stock will react. It's an awful lot to ask an indicator to be able to predict that. There's just way too many things for an indicator to actually be able to predict, let alone the emotion of the market. Emotion is all over the place sometimes, and there's not a chance an indicator can detect that or pick that up. Only price can do that. Indicators, as I'm sure you might probably know, are always lagging behind. They're always late. Think about it for a second. Most indicators are calculated on 3 inputs, different variations of 3 inputs: time passing, price moving, or volume. And all of those things have to have had happened before the indicator can even be calculated. So they're always lagging, they're always behind. And if you can learn to just follow price, you'll find you really don't even need an indicator. And if we remove that whole idea that an indicator can predict, you'll find that trading becomes a lot more sensible. It's easy when you just follow price. Okay? So most people, most traders, they go to webinar after webinar. They're searching. They're always searching. They've spent years trying to find the perfect combination of indicators or scans or whatever it is to help them become profitable in trading. And they work on that 90% of the time, sometimes 99% of the time. And if they just took a little bit of time and followed price action, they'd find that they could get rid of all of that stuff and do a lot better. So we cloud our charts with way too many indicators, and those indicators actually distract us and even cloud the picture. It's like looking through a dirty window trying to see something on the other side. And if we just clean that up, we can do a lot better in our trading. So combining price action with some simple price patterns makes for almost an unbeatable way of trading. So here's an example. If you take a look here, this is stochastics, and I know there's a lot of people out there that are they live and breathe stochastics. You must have stochastics, and there's nothing fancy about the settings. I've got 12.3, 5. A lot of people use 12.3.3, whatever. Little tiny changes won't make that much difference. And this is actually the diamonds, and you can see this is diamonds here in November of 2016. And you can see the diamonds in stochastics said it was overbought. It was overbought, it was overbought, it was overbought. And a lot of people won't trade a stock, an index or anything that's overbought by stochastics. But notice how that was a false reading all along there, that the stock just continued to move higher, or the index here just continued to move higher. In fact, it rose rapidly. In the entire time stochastics was telling us we shouldn't be in it, it's overbought. Okay. Another example here of just some indicators when you start throwing a bunch of stuff on a chart, and this is just 3 moving averages put on a chart. Okay. Nothing fancy about the moving averages, and I'm not even going to get into what the moving averages are. But notice how they lay themselves over price. They put themselves in front of price. And all of a sudden, your eyes are drawn to price alone. And as a matter of fact, small patterns even disappear behind your indicators. You can't see what price is telling you. And those indicators just become a distraction to what's really happening in price. They give us false readings all the time. Have you ever looked at a chart and had your indicators disagree with what price was showing you, and you look back later after not making the trade because your indicators told you couldn't, and seen the stock sharply higher, and you've missed the entire thing? Or an indicator that tells you should stay in the trade, and look back later and find out it's moved sharply lower on you, and you've had a false signal in your indicators. It happens all the time. So one of the things I did is I cleaned up all of my charts. I tossed all that stuff away. And you can see here, I've put these little green squares on there so you can kind of see these really tight consolidation patterns. But you can see how simple and easy that chart is just to follow price. Now, I have on there that volatility stop indicator, and I want you to notice that it's either on one side of price or the other. It's rarely in the way of the price action. So we can still see what price action is doing and have the confidence of using that volatility stop to help us see those trades. Okay? So here's an example of what I mean by patterns that we're looking for. When I'm trying to trade a chart, I want to look for good quality trends. Okay, first I want to find a stock that's trending or reversing a trend. So you can see here in this chart on WTW, we had this gap up on earnings, and that gap up wasn't able to be held. So we consolidated it here a little bit and then sold back down to fill this gap. The stock started to rally again, and we began our trend, a little higher low there, all starting to show us trend. But notice on a clean chart like this, we can see that price action very clearly. And I can tell you right where Right Way Options members got into this trade, we got into this trade here. Breaking out of there, got into that trade. In fact, we have traded this chart several times. Here was another entry that we got in to WTW several times, just doing nothing more than following price. And you can see the returns on these could be incredible. And if you use options, phenomenal. Okay. And notice that it's just producing entry signal after entry signal as long as the stock stays in the trend. Notice how clean and simple that is to read. So what are we looking for? We're looking for, and what I'm showing in this chart is this little tight range consolidations where we kind of get that confirmation that there's no sellers under here. See, there's no sellers there. And then when it finally breaks out and buyers step in, we get that nice buy signal right there. Our stop loss is very, very close. And you can see that's a pattern that will repeat itself over and over and over within a trend. So one of the things I want you to start looking for is start looking for these tight consolidations, okay? And they show up all over the place if you clean up a chart and you can see them. This is a tight consolidation that breaks to the downside. You can see we don't have to chase the trade. We can wait for it to happen and follow in a very concise manner. The other thing we're looking for is deliberate price action. We want stocks that are not only trending, they're respecting support, they're respecting resistance, and we don't have something that's just full of great big long wicks and tails on the candle. We want consistent, or what I call deliberate price action. We want that price action to be showing us or telling us a story as to where it wants to go. It's deliberate, it's concise, it's clean, it's consistent. When we find charts like that and put them in a list, you're going to find yourself calming down a lot in your trading and just simply following a chart when it starts to move, following price, and it doesn't require an indicator. Notice there's no indicators on this chart. Look how easy it was to identify those trades when we just clean up a chart and learn to follow price. So again, trending stocks, and we want to look for really tight consolidations within those trends. Notice that most of these are nothing more than the stock moving and then coming back to trend, moving, coming back to trend, moving away and then coming back to trend. Okay, that's mostly what these are. We're just moving over, grinding sideways, coming back to the trend, and we're respecting that trend. Okay. Next, we want to look for patterns that are pullbacks and reactions to buy or price support. Now, you can see here in this chart in Allstate gapped up here on an earnings report. Gapped up and hit this resistance level, pulled away from it. So we pop up here and we pull back. We consolidate for a while, and we finally build enough energy to pop through. We rest here for a little bit, and this was actually a good buy signal right here. There's one of those little tight consolidations right here. If we were to draw just a simple box right around this little price action right here, there was an entry right there. Now, this stock did pull back and tested support again, but if your stop loss is underneath that price support, you are never stopped out. Now, what we look for is notice that we're in a trend. The stock is trending, okay? And we get this nice little consolidating here where we could have entered, or we wait for this pullback and we get this nice bullish candle. This bullish candle reacting to price support. Now, people ask me all the time, well, what is a buy signal? Well, a buy signal to me doesn't have to be a particular candle. It doesn't have to be a bullish engulfing. It doesn't have to be a hammer pattern with a follow through. It doesn't have to be a morning star pattern. This is kind of a morning star pattern. What it has to be is showing me a buyer's reaction to price support. Buyers are saying right here, nope, we're done going down. It's time to go up. They stepped back in. They reacted to that support. Now, rather than predicting that, what I always do, and this is a mistake I used to make a lot, is I would predict when that would happen. And we all know that predicting something like that, as the stock is pulling back, it can just keep pulling back. So what I wait for is I wait for that buy signal. It improves my win-loss ratio dramatically. It makes me very picky on trades. Okay, but I don't need a whole lot of trades like this to make a really good income. All right. So there's that buy signal. Enter that trade. Look at that. No heat in that trade all the way up to your stop, wherever you get stopped out. No heat on that trade because we waited for buyers to react to that price support. So here's another chart that's just full of all kinds of good price action. And, you know, there's nothing that I enjoy more than just looking at a chart and watching how price moves. Because if we look at it, it's telling us a story. And if we can learn to read that story, if we can see what the story is being told, we can see how we can participate in it. We can follow along in that trade. So here we have just simple consolidation breakouts. There again, those little tight consolidations. Now I actually have a pattern. I call this a pop out of the box pattern. May have mentioned that before, and I've actually got a full workshop available on that pattern. We'll talk about that sometime later, but this is a very common pattern that I find in charts. Very tight consolidations, and then we wait for that price to pop out of there. And I don't know, and I'll tell you this emphatically, I don't know if it's going to pop out of the top or the bottom. And to be honest, I don't care. I just want to wait for it. I want to wait for that trade to set up. So here we have two of those really nice tight consolidations. Notice the stock moves up. We break through this little resistance area over here, right in here, break through this. We rest right on top of it. We sit there and we consolidate in this nice little tight pattern. And look how easy that was for an entry. Now, you might have thought, oh, I don't like this pullback, but we never got stopped out here. Now, this was an earnings gap, so I can tell you that, honestly, I would not have traded this because I always check earnings ahead of a buy. But I want you to know that this pattern shows up all the time, whether there's an earnings event or not, okay? And then we have this gap up in the earnings. And notice it did it again. Nice little tight consolidation. It told us there were no sellers underneath here. No sellers at all. And all we had to do, as a matter of fact, the exact entry for right way options was as soon as that popped out of that box. The exact entry where we got into that trade. Because all we had to do was wait for it to come to us. It came to us, triggered the trade, and we were in the position. Now, you can see here's another rally up, breakthrough, resistance, pull back, and a buyer's reaction to support right here. We're buying. You can see the buyer stepping back in here and saying, nope, 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 nope. No further down, we want to go higher. So there's an entry right here. We go through this couple weeks of protracted little pullback, really light volume. Notice that if you were in here, depending on how you manage this, you might still be in this trade here. But if you got out over here, again, another winning swing trade, you would have been able to get right back in here. We broke the downtrend. We had this little soft downtrend that held price support. And notice this wedge pattern that's formed right here. That little wedge. And price breaks through, and we look for our entry in here if this holds this breakthrough. So we have a nice run here as a result of that breakthrough. So all kinds of things going on here in the chart, and you can see it's just laying itself out for us if we learn to read that price action, not try to predict, not try to be fancy in our trading, not trying to have 14 different indicators to try and confirm this against. Just follow the price. The price is leading us. Let it take us there. We don't have to pick the perfect entry to be successful. We just have to follow what price is already telling us it wants to go. Just follow along. Okay, so here's some more, and this is just I wanted to show you something that's a little bit uglier in a chart, just to show you that even a chart with more volatility like this is Abbott Labs, this is a healthcare sector, kind of a high volatility stock, okay? But you can see we have this little very interesting little cup pattern right here. We break through that resistance, and what do? We pull back to support. And then we see buyers stepping in, reacting to that support. So we can enter here. Or if you miss that trade, and it's very possible to miss that trade, okay, it moves really fast, but now you see that reaction, so all you have to do is wait for the next potential entry, and you see that entry when we pull back to trend, and see again those buyers stepping in right here. They're reacting to those prices, they're reacting to support and resistance. Once again, miss this trade, no problem. These are big candles. That moved pretty fast. We don't have to chase that. All we have to do is wait for the next entry. We move up sharp, and what do? We move back toward the trend, and here's our buy signals. And we can get into this trade. So there's multiple potential entries in that same run. Now, here again, stock moves up, hits resistance. Can't get through there and falls away. But notice how clearly and cleanly it marks this out. This was clearly resistance, okay? This was clearly a support level until that support level failed, and we tested it here and couldn't hold it, so we break down. We come back and we test it again, can't get through. Exactly the same spot. This time when we pull back though, we hold this price support right through here. And then the stock starts again back up. Now I can tell you I would not have traded this. I'm pickier than getting in. Here's that downtrend break. I would not have gotten into that trade. I can guarantee you that. I would not have. I don't chase a trade like that. What I will do though is I'll wait for this. The stock moves on up, breaks through that resistance up there, pulls back, and we get this beautiful bullish engulfing candle. The bears tried to take it down. The bull said, that's as far down as we're going to go. And this is right where Right Way Option members got into that trade. No heat in the trade, just a simple, easy trade to the upside. Nothing complicated about it. Very, very simple. Now, let's throw that volatility stop on there, okay? That volatility stop can actually help us spot support and resistance. So you can see when we've got the green dots underneath, that's telling us price support. Now you can set these dots up any color you want. I just have them set up as red and green. And you can see that when price is above these dots, this is showing us price support levels. And we can just follow along with that. When we fall below, right in through here was a price resistance until we broke back out. Notice if I just extend that over, that is showing me price support when it turns back to green. Okay, so the same pattern here without any of the line markings on there is showing up. You don't have to be a support and resistance guru to see this. We go from resistance to support. So instead of chasing it right here in this move, what we want to do is wait till we get the lower risk entry point, that pullback. Let the pullback happen. It holds support here, and then buyers step in with a buyer's reaction to price support right there. Our stop loss will be just under those dots, and all we have to do to manage this trade is at the end of every day, move the stop loss and follow this trade. You can see no heat taken on that trade. Very, very simple. And we can do this over and over and over. So we just adjust that stop loss. And this volatility stop will help you identify resistance and support. You know, one of the common problems that I run into a lot with folks that I work with is they buy a stock right near resistance. They wait for so much upside confirmation here, okay, that by the time they buy, it's almost exactly when the stock pulls back. If that happens to you a lot, you almost get a complex. This used to happen to me. I get this almost a complex thinking that somebody must be watching me, because every time I pull the trigger on the trade, it pulls back. I mean, almost immediately pulls back. Well, if that happens to you, that's just a real simple problem to correct. And that is, stop buying stocks at resistance. And that's what this is. This is buying a stock at price resistance right here. See right here? There's the price resistance. And this stock moved up and hit that and pulled back. Nothing more than that. It was just reacting to a price resistance point. Okay? So if we can prevent ourselves from buying below price resistance, we don't have to suffer through a lot of those pullbacks. So we wait for the break, we wait for the pullback, and look at how easy that trade is to make. Very, very simple trading. So I hope you guys found that useful and interesting. You know, I get really excited when I talk about this stuff, because I know it can help people change their lives. It truly can help people change their trading lives. So if you have some more interest in this, or you'd like to see more of these videos, please do me a favor. Could you click that subscribe button on YouTube? And that way you'll get notified when a new video comes out, okay? And I try to put these out regularly. And by the way, once I finish this series, I'm just going to start another one. We're going to continue this process all along. And let me help you with your trading. I mean, I would feel privileged to help you with your trading. So take a look at that and subscribe to that YouTube channel. If you have any questions or anything like that, feel free to stick a comment in there. I'll try to answer. And if there's anything that we can do, please feel free to contact me at www.hitandruncandlesticks.com, or you can send me and just give me a message there at hitandruncandlesticks.com. That's where I run my right way options service through. So please ask those questions. If there's anything I can do for you, let me know. Everyone, take care and stick around, because next time we're going to talk about alerts and conditional orders. I know there's a lot of folks out there that are very busy. They're working full time and they cannot watch the market all day long. Well, I'm going to show you a way, the way that I used, the things that I did to be able to work full time and still build a nice trading account with profits taken consistently, just using some simple alerts and some conditional orders. Okay? So we'll talk about that next time. Hey, everybody, have a great day. I will talk to you all soon. Thank you very much.